Alright, so people ask me all the time. Actually, no one ever asks me anything. Andrei, how much money should you invest? And the answer is, as much as it takes to get you your own money. This is a real dollar bill, believe it or not, and if you look real close, now you see me. No, but for real, this is a real dollar bill that I can go to the grocery store and actually spend right now. This is a real, genuine, authentic bill. And if you want one, you can go to your bank right now, and if you smash the like button on this video and you show them that you've subscribed to my channel and you ask for the Andrei dollar, they will give you a look like you're a crazy person because I just made that up. This was done by a friend of mine. It is a real dollar, but I also think it's a federal offense. I won't tell if you won't tell. I'm sorry, Papa Pal. You are the only one that has the power to print an infinite amount of monies. All right, so I probably titled this video something crazy like dividend investing has made me rich. And the truth is, it kinda has, but not in the way you see 18-year-olds on YouTube wearing Rolex Sky Dwellers. Instead, dividend investing has given me the gift of time. Making just $50,000 a year over the last 10 years, I was able to grow a stock portfolio that's now approaching close to $800,000. And it's also on track to pay me about $1,500 a month this year. And that's all done automatically without buying and selling stocks and becoming a stock trading expert. And that's pretty incredible when you consider the fact that 10 years is a relatively short amount of time. And I know it sounds like I'm gonna try to sell you on some courses, which is why the link is down below to my secret stock trading courses. Just kidding, there are no courses, there are no secrets, and there are no shortcuts to investing. It's all about consistently investing money over a long period of time, plus the eighth wonder of the world, the magic of compound interest. So speaking of magic, I want to show you how I've been able to turn my dividend portfolio into a magical money printing machine. So let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the magic of dividends. A dividend is a cash payment that a company will pay their shareholders for just holding on to a stock. And you don't actually have to even sell the stock, you just hold on to it and it'll pay you money throughout the year. At that point, you can transfer the money out from your brokerage account into your bank account where you can spend it on whatever you want, like the new Pokemon set that just came out. Sick artwork, I've spent way too much money on it. Or you can just use the money to reinvest it back into the portfolio itself for compound interest. That's what I've actually been doing since 2014, and the income has been consistently growing, and so has my portfolio. Now, dividends are not a magical solution to all of your investing problems because dividends are part of the overall return of a stock. And in some cases, it can lower your overall returns because anytime you get paid a dividend, you have to pay taxes on that income. But the reason I love dividends so much is because dating back to the 1960s, reinvested dividends and compound interest have accounted for 69% of the overall return of the stock market. And that means if you invested $10,000 in 1960, today you'd be worth closer to $4 million, as opposed to only $641,000 if you didn't and you bought Pokemon cards instead. But what's really gonna blow your mind is seeing just how much dividends played a role across every single decade. In the 1940s, for example, during a crazy period during the creation of the atomic bomb, the end of World War II, India and Pakistan became independent of the United Kingdom, and reinvested dividends still accounted for 67% of the stock market's growth in that time frame. It accounted for 30% of the 50s and 44% of the 60s, a massive 73% of the 70s during a period of high inflation, and so on and so forth, with an exception of the 2000s when the whole stock market was negative, but dividends still returned a positive 1.8%. But another huge reason why investors absolutely love and respect dividends is because no matter what happened to the stock market, whether it was going sideways or it was going down, historically speaking, those dividend paychecks were still being paid. Even in the most recent example, last year in 2022, when the stock market went down 20%, you'd think that dividend stocks would cut back and not pay as much money to their shareholders. But 2022 happened to be a record year for dividend stocks. Payouts increased by 10% or $565 billion. And this is so cool to see when data that I find matches up with my own personal experience. Check this out. At the beginning of 2022, my stock portfolio was roughly right here. At the end of 2022, though, my portfolio went down. It actually lost 12%, which I'm proud of, by the way, because that's better than what the stock market did. It lost 20%, so I lost less money. But the point is that even though the stock market lost me money, that year I collected more in passive income than I ever did before. In 2021, for example, I made a grand total of $9,800, but in 2022, the year my stocks went down, I made $13,500. And the income that dividend stocks pay me is not the only power that dividend stocks have. It's also in the psychological effect of how my stock portfolio moves. For example, research found that stocks that pay their investors dividends had less volatility. And that's just a fancy word for measuring how risky something is by a word you've probably heard of before called beta. A beta score of 1 just means that stock will move in the exact same direction by the same amount as the stock market. So example, VOO is an ETF that has a beta score of 1. And that's because it is the stock market, so it behaves like the stock market. Now, dividend stocks usually have a beta score that's less than 1 because they're less risky than the overall market. But tech stocks usually have a beta score that's higher than 1 because they're more risky. Other than risk, it tells you absolutely nothing. But the reason that it's useful is that once you figure out how much risk you're taking, you can measure it against the golden standard that is the stock market. If your stock has a beta score that's higher than 1 and you're taking on more risk, then you should be making more money than the stock market. And if you're not, and you're losing money, you are losing money unnecessarily while taking on more risk, which is never a good idea. But the ultimate goal for every dividend investor is not to become rich and retire at 100. Instead, it's to build enough passive income to pay for your expenses without needing a job and without hopefully needing to sell your principal investment, aka your stocks. And the way to do that is actually pretty easy. You take your spending and you multiply by 25. So if you spend $30,000 a year on food, groceries, and travel and multiply by 25, you get $750,000. And that's how much you need invested at a 4% dividend yield or interest rate to make $30,000 a year. And the most famous example of the person that was able to do that and so much more is Warren Buffett. In August 1994, Warren Buffett's company Berkshire Hathaway bought 400 million shares of Coca-Cola for $1.3 billion. That year, they made $75 million in dividends. Now that's about 5.7% of their initial investment, which by comparison is not a lot of money, but fast forward to last year, 2022, that initial investment paid them $704 million in dividends, over half of their initial investment in a single year, and it continues to grow every single year. And the next year, they did the same with American Express. They spent $1.3 billion, and that dividend grew from $41 million in 1995 to $302 million in 2022. Now remember, all those dividend payments are just part of the overall return. We have to take into account the stock price growth as well. Last year in 2022, Coca-Cola was worth $25 billion and Amex was worth $22 billion. And that's how in 2023, his portfolio is expected to generate $5.7 billion in cash from dividends alone. And all you need is a
small loan of $1 million.
Jokes aside, this strategy does work for everyone. You just need to stay consistent. So let me show you my portfolio. So starting from where we last left off, in May this year, I made $919, which is a 9.6% increase over last year's May. But June was the craziest month I ever had because in June alone, I made over $2,600. That's a 40% increase over last year's June, which is incredible. And the best part is that on top of paying me more every single year consistently, the portfolio itself is also up 11%. In fact, it's on track to make roughly $17,000 this year alone, and now we're getting into some solid income levels. Now, if I assume that I will continue to invest the exact same amount for 20 years, by the year 2043, it shows me the portfolio will make roughly $111,000 per year. Now, I do want to be transparent with you and tell you my current rate of investing is $200 per day, which I realize is way more than what the average person is probably investing. But even if I put that number at $0 and I only assume that I'll reinvest what the dividends are paying me today for 20 years, in 2043, it'll also still pay me $53,000, which I realize will not be worth as much thanks to inflation, but I would rather make $53,000 a year 20 years from now than $0. Now here's the crazy part. So far I've been showing you the income part, but how much will the stock portfolio be worth 20 years from now? If we assume I only reinvest my dividends, which right now is about $1,400 a month, and if I assume the standard 8% returns in the stock market, starting with a current portfolio value of $800,000, in 20 years would be worth closer to $4.5 million, paying me anywhere from $50 to $100K a year. And that just means I won't have to rely on the government for Social Security and on anyone else to smash the like button, but I probably still will. Now there is an interesting alternative though. Why would anyone not just buy a bond that's yielding 5% guaranteed instead of risking their money in the stock market with dividends that are paying 2 to 3%? What good is that if the stock itself loses 20% in the market? And the answer is bonds are actually better right now for fixed income, especially if you have wealth to protect. But there's 3 main reasons why I chose dividend investing over bonds. First, I'd have to pay a lot more in taxes if I sold all my stocks and converted them to bonds, and I don't want to have to do that. 2, I think as a country, we're addicted to low interest rates. We want cheap debt because high interest rates hurt not only consumers and businesses, but our government as well, which has a ton of debt that it's paying so much interest on right now. And 3, because I'm investing for the next few decades, data shows that investing in the stock market will give you a better return than investing in the bond market. And 4, the median dividend payout ratio for the last 96 years was 56.3%, but at the end of last year, it was only 37%. And that means there's a lot of room for dividend increases in the future. And this theory is also supported by the amount of cash that companies have on their balance sheet right now. In fact, we're almost at an all-time high for cash on corporate balance sheets. So companies are sitting on a lot of money, and some of them will use it to reinvest back into themselves, some of them will use it to buy back their own stock, and some of them will increase their dividend payouts. And because we have a massive retiring baby boomer population, a lot of those people will be looking for additional fixed income, and some of them will invest their money into dividends, which is good for those stocks. I'll say the real risk to a person in my specific situation is missing out on a lot more money by focusing on dividends instead of something else like tech and the AI revolution, which could make a lot more money than dividend stocks in the next few decades. I don't know, but that's why you diversify. Before you go, I just want to throw this out there. There are so many ways to invest in the stock market, and doing what I'm doing is one of many ways. But so is buying broad market index funds, which will probably give you a higher overall return. Dividend investing is what works for me, and I don't encourage anyone to follow in my footsteps. All I care about is that you invest as early as you can. The rest is really up to you. Also remember you're watching some random guy on YouTube who looks like this and makes alien faces and magic tricks. Either way, thank you for spending your valuable time with me. I hope this was inspiring or helpful, or at the very least, a complete waste of your time, but was slightly entertaining. As always, focus on your own investment journey. Have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to grab your free stocks, links are down below, and then go track them automatically with the spreadsheet linked down below in my Patreon. Love you, thank you so much for watching this video. I'd love to see you back here on Monday, Friday, sometimes a Wednesday. See you soon. Bye-bye.